Condominium sales in the GTA have seen a steep decrease year over year. The latest Toronto Regional Real Estate Board report shows a 46% drop in the third quarter of 2022 compared to 2021. There were 4,177 condo sales in the latest quarter compared to 7,795 at the same time last year. The number of listings was also down by 16%. However, the average selling price in the city was up 3.3% and 4.5% in the surrounding areas. TRREB is also reporting the average cost to rent a one-bedroom condo soared by more than 20%. In the third quarter, the average rent for a one-bedroom climbed to $2,481 compared to the same time last year. Rent for a two-bedroom rose by about 14.5%, with three-bedroom units up 21%. The board attributes the rising cost to would-be first-time homebuyers putting off home ownership because of the high cost of borrowing. And for more on this, we're joined by Jason Mercer, TRREB's Chief Financial Analyst. Jason, thanks so much for joining us this afternoon.
Thanks very much.
Let's start with the grim news for renters here. Are people looking to rent or just move up to a different level of condo? What's the level of concern in terms of how much higher these prices could continue to go up?
Yeah, there's a couple of things at play. Number one, as we moved away from the initial phase of the pandemic, we started to see an acceleration in population growth again. And that was on the back of immigration, permanent residents moving into the Greater Toronto area, but then also temporary migrants, so people moving into the GTA to, say, go to school or take on some sort of temporary employment. And those are major drivers of rental demand at any point in time, wherever you are in the economic cycle. And then you add to that the fact that we've seen a drop-off in home ownership demand. Well, people still require a place to live. They're gainfully employed. We're seeing the unemployment rate at near record lows, and so more and more households have turned instead to the rental market. And so as a result, we've seen strong levels of demand up against a very short supply, and that's seen a real acceleration in rent growth.
And of course, supply can't just happen overnight. There is a lot of development going on, but how tight is the market between supply and demand for the rental market?
Yeah, one of the points we made in our release today is that, we haven't actually seen a net increase in rental supply, but for investor-held condominium apartments. And obviously, that supply can ebb and flow depending on what that investor owner decides to do. If you had a unit in the rental market for a period of time and then you decide to sell, you lose that rental stock. And so one of the points we made that as we move forward, we also need to see a more sustainable growth in purpose-built rental properties in the Greater Toronto area, and that would help balance out an extremely tight rental market, a rental market that more often than not over the last 10 years has seen single digit or below vacancy rates.
Now, for buyers or sellers, whether you're a potential home buyer or seller, this affects both camps. If we continue to see steep decreases in sales, at what point could average prices also follow suit?
Yeah, in terms of the average selling price in the condo space, it has held up relative to where we were this time last year, but the pace of growth has really slowed. If we were having this discussion in October of 2021, we would have been talking about double-digit rates of growth, and so there is more choice out there for buyers today versus what we saw a year ago or even 6 months ago, and so that has seen a moderation in price growth, and in some categories outside of the condominium apartment space, we've actually seen year-over-year declines. And so, the impact of higher borrowing costs and a reduction in sales relative to listings has impacted price for sure.
Jason Mercer, thanks so much for joining us this afternoon.
You're very welcome.
I appreciate the insight.